Welcome to this panel discussion on the Chinese economy. I think to start with, I'm sure you all are aware that China has been facing. It's been about a month that President Donald Trump is in the White House, and already we are seeing the signs of a trade war that is brewing between America and China. Uh, at this point of time, the Chinese economy also faces, you know, it faces twin shocks. So internally, China is tackling the entire downturn in its property market. Its provinces are debt-ridden since the advent of COVID. And overall, there is a very low consumer confidence in the Chinese economy. Um, Externally, China faces a lot of technology denial regimes that the US, two different administrations in the US have put in place. And since the advent of Donald Trump, there is this increasing and escalating threat and materialization of this threat through sanctions. Now, to discuss this, please join me in welcoming a panel today. So we have a stellar panel to discuss this. Firstly, Ambassador Smita Purushottam. Uh, Ambassador served in Beijing. She served at a time in China which was seeing this entire economic reforms under Deng Xiaoping. So she comes with that perspective. And post, her retirement from the service, Ambassador Purushottam has been instrumental in founding a non-profit called SITARA. Now, SITARA stands for Science, Indigenous Technology, and Advanced Research Accelerator. So, welcome, ma'am. And Professor Ritu Agarwal is again a professor from the China Studies Department of JNU. Professor Agarwal has, extensively toured China and also done a lot of field work related to the Chinese economy, particularly the rural economy. And last but not the least, Antara joins us today. Antara is a China fellow with ORF, and she tracks a lot of internal discourse that is going on in China. So without further ado, I would like to start with Professor Agarwal. Now, Professor Agarwal, we've discussed and we've seen this entire thing play out. Post-COVID, the Chinese economy hasn't done too well. And how do you see the challenges before the Chinese economy in 2025? And coupled with that, the external shock. I mean, how is China recalibrating with this entire Trump presidency? So if you could shed light on it in about 5 to 7 minutes, ma'am. Yeah, thanks.
Thank you very much, Kalpit, to initiate discussion on this important theme. And thank you, ORF, for hosting me here. I think we have very important speakers here, so I will not take much time, just flag some issues which maybe later on we come back to the discussion later during the question answer session. See, I think there are, what I found the major problem for China is now basically how it is going to maintain a very delicate balance between the structural issues which Chinese economy is facing now and the immediate needs which they are supposed to do for, to make their economy to function or make their economy to grow. Now, one of the important problems which everybody is talking about and China's economy is also facing is a large-scale provincial debt. And why I'm making it so important to discuss is that because this provincial economy is very important to understand the urban growth, right? So most of I remember, and I'm sure ma'am will also say that, we started looking at China as a kind of a rural China. The China was considered to be the land of rural villages, peasantry, collectivization, Mao's time. So that era has completely gone now. And now we are in the phase where the cities have been integrated into the global economy. So we have a new burden of how the urbanization has to cope up with the real estate development. And this real estate development has to be accompanied by the finances, infrastructure investment, which the various provinces and the cities are going to bring in, to basically make this economic growth possible. So the main challenge before the Chinese economy is now that how to make urban growth sustainable, in the sense, how to maintain a particular urban growth, a particular level. B, how to make the real estate development continue with this kind of a building, new apartments, functions, etc. And C, how to make the local economy function without getting into more debt. So for that, if you look at it, Chinese government have been devising various methods how to increase the fiscal capacity of the local government. So they initially, now issued a new kind of a practices called local government bonds. What is the local government bonds? In the sense that you basically raise money or through the financial market. So securities or various kind of bonds. So you raise money and then put it into the real estate development so that it can be sold out, and then the money can come back again to the market. So that cycle in a way has been broken, because what is happening is that they are able to raise the money from the financial market, but whatever the units have been prepared and constructed by the Chinese provinces and the cities, they have not been sold out properly. So which means that many of these buildings remain unkept, unsold, and that is creating a problem because the investment is not coming back to the market again. So that is creating a whole lot of a mounting pressure of local debt, which many economies are facing now. So they are, I can come back to it in much detail later. And this was a part of so what is the ultimate, the figure which I have is that by 2022, the local government bonds accounted for 99.46% of the local government debt. So this is like something so huge. And as you all know that it was basically the part of a target-based approach. So earlier this land financing worked, but now from the land financing, they shifted to the financial platform. From financing platform, they shifted to the local government. So they are now trying to raise the limit of local bonds, etc. So many things are happening, but thing is that nothing seems to be working out. So what I'm trying to say is that the Chinese economy seems to be trapped in the building cycle of capital accumulation and not providing any kind of a return back to the infrastructure investment. That is, quickly. And the next important point, which I could say quickly, is that many of these high-speed railways, etc., are not giving much benefit now. So it is either used, remain unused, or they are not giving so much of return as they were expected to be. Second important thing is consumption. So as I remember, Kalpit was saying, so what is the consumer spending? So it looks like that most of the Chinese citizens are keeping 50% of their income. They're not spending it because there's no guarantee, there's no security, they are not sure about the return. So recently there was a Central Economic Work Conference in December, and the major motive was that consumption. So I think the major problem is that how to make the people to invest in the Chinese economy back, and many people are not buying houses, etc. So real estate crisis coupled with local government debt, and other thing is that people are not ready to buy new houses. So that become a kind of a major problem for Chinese government to handle in the immediately. So these problems are not going to be resolved unless until they come up with this kind of a strategy. So earlier the whole idea of a land acquisition. So the Chinese cities are too much obsessed with this idea of a new townships or new kind of a real estate property market. So for that you need to require change the land from the agrarian to the commercial land. So all that process they have made it very simplified now. One can do it, but then the huge pressure is that how to make the agriculture population to get relocated. Now the problem is that earlier the Chinese cities were functioning properly and Chinese cities were having manufacturing units. So most of the people were getting migrated to the cities and getting employed there. But now even that situation is not happening because most of these factories are shut down. You must have heard of this Foxconn, which is basically taking out their production out of Chinese cities. So in that case, where to make this population employed in the cities? So that becomes a major challenge for the Chinese government. So the whole idea is that it's not simply geographical, where most of the rural areas have been taken away by the urban cities, but it's also demography, in the sense where most of the people are moving to the cities. Are we offering any kind of an employment situation to them? So last point before I just stop, we all began with this whole idea of a developmental, kind of economics, where we thought that local economy is going to be more entrepreneurial. So we talked about, this model of development, Changzhou, Hanzhou, and everybody has their own, model to follow. So it looks like that old model of Chinese economy, which worked for some time, now it's not because of Xi Jinping. It is like so many years of development and which was sustaining for some time, but now it is almost like kind of a, completely blocked, in the sense that it is not generating so much of profit as it was supposed to generate in the last few years. So I think I stop here and maybe give other speakers time to speak. We can come back to it later.
Thank you so much, Professor Agarwal, for your insights. In fact, you stopped on that note that Chinese economy is not generating too much profit, and I think Xi Jinping is also aware of it. And since the 20th Party Congress, he's been increasingly talking about a high-quality economy where he sees technology as this great savior of the economy, its potential to boost incomes and also, sync with his larger objective of common prosperity. But we've also seen this entire thing of the US and its allies launching, a sort of a technology denial, red flagging the entire practice of its civil military fusion. So, Ambassador, I just want to come to you. In the last 3-4 years, we've seen this entire technology denial. So it started with semiconductors, AI, but yet you have China demonstrating a lot of technological prowess. So I think in August 2023, when Gina Raimondo went to China, at that point of time, they, Huawei came up with this new chipset and a new phone. Around the time of the Trump inauguration, you had the kind of splash that, DeepSeek did. So, firstly, how do you assess, America's strategy? Is it working? And what explains China's, progress in science and technology? And also, are there any lessons that India could draw? So, if you could, expound on this. Over to you.
So much. It's such a pleasure to be back with you, Professor Agarwal, with Sri Mankekar and Professor Ghosal. So these are critical questions, not just for China and the US, but for India also, as you correctly pointed out. And I would like to take off from your point that the current situation in China, the economic structure is not providing enough returns on the investment, because China for decades has had an investment-heavy strategy. High savings, high investment, lower consumption as a proportion of GDP, which has also resulted in huge export surpluses, which has in its turn led to increase in debt, because there's a very good analysis which I found called the zombie economy, in which what happened was that China was, because of its semi-closed account, it had to, the dollars that it earned from its exports had to be converted into renminbi. Enormous liquidity, which didn't find enough profitable outcomes, and which therefore got invested in real estate, which created, with such easy liquidity, real estate boom didn't lead to the returns, as you pointed out, and it led to a lot of headwinds for the Chinese economy, including now technology denial, not just technology denial, even more critically, market denial. So China is faced with a lot of issues and impediments, but at the same time, I would like to emphasize that China, since the 80s and 90s, since the 863 program, since the 90s, as you said, was focusing on quality-led development. Because as Robert Solow, the Nobel laureate, whom I'm very fond of quoting, said, in America during the period, pre-Second World War period that he studied, technology accounted for nearly 90% of growth, which is what I've been trying to tell our government. Please focus on a technology development strategy. You can achieve the same kind of growth if you do that. And China has learned this lesson and therefore focused on a technology-driven strategy for a very long time. And slowly it has gained, certain momentum. Even in the first decade of the 21st century, the Chinese information communications technology sector had completely overtaken everything else. 30% of the world market and 80% of India's government networks were taken by Chinese companies, and so on. China also had a very good strategy, industrial policy, in which it tied its trade and foreign investment strategy to its industrial policy to promote economic development at home. It joined ITA-1 much later than us, for example. Just when HCL Wipro had started producing computers in India, we signed ITA-1, destroying our hardware sector completely, didn't recover for a very long time. C. The only entity which was developing, indigenous telecom technology was destroyed. Why I keep talking about telecom and ICT is partly because I've studied it, but also because it is underlying everything. It is underlying everything, your social life, your defense, your economy. So ICTs are very critical, and that's why the Chinese government, if you'll notice, especially Xi Jinping, in each one of his science and technology speeches, talks about informatization, which is ICTs really, digitization of the economy, how it'll not only promote economic development, but also the military power of China. And of course, to be followed by intelligentization, which is artificial intelligence for which they have their own plan. So very quickly, if I have a little time, I mean, they had two kind of pillars of their science and technology strategy. One was endogenous, because the American and foreign literature emphasizes, and I used to focus a lot on that earlier, the exogenous strategy. I'll just come to that. But the endogenous, let's give them credit. They did a lot of good work. Huge funding of R&D. Provincial governments, as we were discussing, hugely supporting local companies. Huawei really got support from the local Shenzhen government, from which, it originated from Shenzhen, and not from the central government initially. To its credit, the central government ditched its PSU, the SOE, the Great Dragon, and started funding the private company Huawei. So these were the kind of strategies, that China followed, quickly developing its ICT industry. And so huge R&D funding, procurement guarantees. Right from the beginning, the Shenzhen government and the local governments gave procurement guarantees to Huawei, for example. And this is throughout the Chinese economy, because Article 35 of one of their laws says domestic procurement. We came out with this in 2017, and I can tell you, because we follow it up through our NGO, it's very patchily and inadequately followed. We have had a few victories on this to enforce, domestic procurement, but partly because of, all sorts of loopholes in our system, and many other factors, unfortunately, the domestic procurement doesn't take place as much as we would like, because 20% of India's GDP apparently is domestic procurement. So procurement. So if you do it domestically, can you imagine the kind of impetus you give to the economy? So procurement, standardization to ensure that your standards are prevalent. The CMF strategy, which is made much of, civil military fusion, but the Americans also have it. Why do you think they penalize dual-use technologies? Why do you think that the national security state in America promotes, the integration of the civilian sector, the commercial sector, into its venture capital incubation strategies? I can talk more about that later, but I need to rush through this a bit. So that was that. And the exogenous one, you're familiar with, copying, transfer of technology, FDI obligations. Unlike us in China, they insisted on performance obligations for FDI. We surrendered all our space. Professor Mujkund Dubey, very famous, also ambassador, recently deceased, he had written a book on the WTO negotiations, and he wondered why we gave up our industrial policy space in it. No performance obligations on FDI, which is very poorly also tabulated, according to Professor Biswajit Dhar. And so we lost that industrial policy tool. And so on and so forth. FDI also, China had huge performance obligations, localization of production, create R&D centers in China. So it led to the creation of ancillary industry, which we're struggling to create through the PLI. PLI is not really doing it for us. We had from SITARA suggested the design-led incentive. It has been implemented, but in a much smaller scale than the PLI, which focuses on sales. We had said focus on design-led innovation, design-led production, because that's where the value lies, in the IP, not even in manufacturing. Manufacturing is great, but the design must be owned by you, the IP must be owned by you. So those were the strategies that China followed, unlike us, and it has led to this huge upsurge. And I can talk about what Huawei did later, because I think I must have reached the end of my thing, but there was a pivot from the Chinese government, a huge intensification of their science and technology strategy, and individual companies like Huawei also did a lot. So now you have the achievements that China has actually launched a 6th generation hypersonic passenger aircraft, which is much more difficult than a fighter aircraft. A fighter aircraft, apparently they've already done. And 6th generation satellite communications, 1,000 times the speed of experimental. I mean, all this has to be verified, but it's come out in the news. EUV, extreme ultraviolet lithography, they're already working towards it. This is the most complicated, they see the most complicated technology on this planet. Fusion energy, solar, EVs, everyone knows, battery, such vision in early 2000 only they were talking about, leaping forward, not following, in the auto thing, but leaping forward and investing in the next generation of EVs. Although now the Japanese have come out with this hydrogen fuel, which our Minister Gadkari is driving, which is extremely expensive, of course. But so this is the kind of vision, that they have displayed, and with a complete emphasis on national security at the strategic level, central government level, and which we have been pleading with our government, please come out with a national strategy document, not necessarily military, but science and technology, written to them, published on it, and I'm so grateful to ORF for giving us a platform to share our views on this. Thank you so much.
Thank you so much. And I think great points on the drivers of science and technology. And also, I think you concluded by this entire national security imperatives for China and also for India. Coming to that, I think it's very important to understand that since the standoff began between India and China, there has been a lot of emphasis on national security, but somewhere in this entire debate, we've kind of lost track of the economic security imperatives for India. Now, post about 4 years of this, military standoff in Eastern Ladakh, I think India and China are again embarking towards a very cautious normalization of relations. Now, Antara, I'd like to bring you in here, and the Prime Minister has had a very successful trip to the US. And parallelly, on a parallel track, we are seeing India normalize its relations, or at least try to normalize its relations with China. Now, how do you see, firstly, how is Beijing watching this entire India-China cooperation, and what will be the impact and the implications of that on our normalization? So if you could expound on that.
Thank you, Kalpit, for inviting me for today's discussion, and it is indeed an honor to be a part of today's discussion. It has been a wonderful, listening to both my co-panelists. What I would like to add to the conversation is the internal discourse in China on Chinese economy. So coming back to your question about where is India-China economic relations headed, I would like to share both the Indian perspective as well as the Chinese perspective on the trajectory of China-India economic ties. And from there, you can make your own conclusion about where both the countries are headed. So let me start with the Indian perspective. So as we all know, our chief economic advisor created quite a storm last year by recommending more Chinese investments into India in the annual economic survey. And that spurred a lot of debates within Indian strategic circles about the issue of Chinese investment. India, as you know, has tightened security of investments from China since 2020, when the pandemic broke out, and also when the Indian and the Chinese military clashed at Galwan Valley at the LAC. However, fortunately, of late, things seem to be changing, particularly after Prime Minister Modi started his third term. A question that has gained currency is whether it is time for India to adjust its investment policy towards China so as to reverse the downward trend in India-China relations. Also, at a time when India's FDI inflow dropped by around 62% to a 17-year low standard, the question actually gained a lot of relevance. In fact, in recent months, India-China did make important progress with resumption of high-level dialogues, reaching some important consensus on the sensitive border issue. Although the situation at the LAC did improve to a certain extent, but on the issue of trade, economy, and investment exchange between the two countries, things did not pick pace as was expected by many. So which also shows that there seem to be a lot of, there still exist a lot of differences between the Indian and Chinese side when it comes to economic exchanges between the two countries. There have been some reports that India might relax the review of Chinese investment. However, so far not much has happened on ground. And only last week, our chief economic advisor made a media intervention where he claimed that India would not rush to adjust its investment policy towards China in the short term, as both sides would be crossing the river by feeling the stones. So that sums up India's current position on the issue of Chinese investment. Now, let's discuss how China is viewing the issue. China, as you know, is very busy these days responding to President Trump's tariffs. So, at a time when tit for tat counter sanction has become very popular in Chinese policy circles, I see many Chinese observers resenting why China hasn't taken similar strong actions against India in the past few years. It is interesting to note that Chinese observers often single out the US in the developed world and India in the developing world, and they strongly criticize both countries' China policy. This might be related to the fact that India has now become China's second largest source of trade surplus after the United States, contributing to more than $100 billion surplus for China every year. Some Chinese observers believe that just like President Trump, who wants to charge countries who makes money off the US market, the Indian government also believes that China making money from the Indian market is a card that can be played against China. That is, it can tell China that if it wants to keep making money from the Indian market, it has to be sensitive to India's concerns and make concession on various issues, including the sensitive border issue. They argue that an important factor behind the protracted and the very difficult progress of the Sino-Indian border negotiation in the last few years is due to India proposing the premise that China has to withdraw from the border, otherwise Indian market will not remain open for China and it will impose trade penalties on China. Many Chinese scholars now want the Chinese government to approach the game with India from a position of strength. That being the stronger party in the from every respect, China must drive home the point to India that even if India does not like China making money from the Indian market, it doesn't really have many options against it. After all, as we know, China is the only country with all industrial sectors. It has the most complete industrial system in the world. It is the only country that can provide almost all the products related to fourth industrial revolution. So given China's great industrial advantages and also given the anti-globalization or the protectionist tendencies in the West, India has little option but to trade with China on China's terms. So in other words, Chinese companies will continue to enter Indian market. They will continue occupying more and more market share while simultaneously making efforts to prevent India from growing into a strong competition to China. Overall, be it the United States or India, the need to demonstrate strength internationally seem to be a consensus around in the Chinese strategic circles. And a part of it is because of the severe economic challenges facing the Chinese economy at home. Much of the challenges faced by the Chinese economy has already been discussed by my co-panelist. What I would like to highlight is one issue that the Chinese media is continuously talking about, and that is deflation. So Chinese strategic communities seem quite concerned about the deflationary trend becoming more and more prominent in Chinese economy. Although the Chinese government has actually played down discussion on deflation and warned analysts to avoid using this term, however, it is becoming more and more popular in the public discourse, particularly after the monthly data showing sluggishness of main macroeconomic indicators measuring inflation in China. For example, the producer price index, that is the PPI, it has fallen for 28 consecutive months. The overall consumer price index or CPI, it continued to remain at a very low level, and such low level China has seen only twice in its economic history, that is during the 2008 financial crisis and also during the 1997 to 2003 Asian financial crisis. GDP deflator, another indicator, it has been contracting for more than 1 year now. Other than that, Chinese companies are actually stuck in a vortex of uncontrollable price wars. Like, everybody is reducing prices in a competitive price war, So that is happening, which is weakening the innovation capability and also reducing their profitability. And on the top of all these things, there is this intensifying tariff pressure from the United States. So some Chinese analysts are of the opinion that Chinese economy might have fallen into a predicament of being attacked from all sides. So first, there is this slowdown in the growth of domestic consumption and investment demand. Second, blockade of the European, American, and Japanese markets for Chinese exports. And third is the catch-up of competitors in Southeast Asia like Vietnam, in South Asia like India. So they fear that the deflationary pressure on the Chinese economy is not really going to be a temporary phenomena. It is going to be, it is a long-term trend. A major shift, a long-term trend in Chinese economy, and it will be a very costly affair for the Chinese government to reverse this trend. Looking back in history, Chinese observers warned that Japan, in similar situation, had to choose the extreme path of external expansion and solve its economic difficulties through war. Although China is not Japan, even then China might have to take very difficult choices going ahead. So to sum up, I would say that the economic trajectory, the overall trajectory of the Chinese economy and its impact on the Chinese society is something that requires our continuous vigilance, because it is going to influence Chinese behavior globally, at the global level, including towards India. So I'll stop there. Maybe I can talk about other things later.
Sure. Thank you so much, Antara. In fact, thank you so much for shedding light on, what's going beyond the iron curtain or the bamboo curtain, whatever you call it. I think one of the points that you made, being, China, the feeling of being attacked from all sides. And I think even President Xi Jinping brought out that some time back during the two sessions in 2023. That's when the Chinese parliament meets. Xi Jinping spoke about how China was there was a high-tech containment being launched by the West, and now you talk about this entire thing of being boxed in by all sides. Now, before I open it to the audience, I think I just wanted to just ask, this whole thing about being attacked from all sides. This week we saw President Xi Jinping convening this entire symposium of, China's Fortune 500, if we can call them that way. This entire tech titans, captains of industry, industrialists. We also saw the, rehabilitation of a man who just a few years ago was in a doghouse, so to speak, of Jack Ma. So I think if both of you can give your perspective on what does this signal. Firstly, what does this signal, and does this have anything to do with Trump, the Trump factor back in the White House? So, if you could get both of your. Yeah.
See, of course, no doubt, as Kalpit is saying, that there is a kind of encouragement for private business people, which was not a case in the last couple of years, because as we all know, Jack Ma was attacked and he was actually, the idea was to cut down the monopoly. But now in the recent symposium, they are giving a kind of benefit to the private business. Maybe there's a pressure from outside, and also there's a demand to create a new kind of economy where demand can be generated within. I think that may be one of the options. Other thing is that there was a lot of crackdown on the, not exactly crackdown. There were a lot of pressure on the private business houses in the various part of China to pay all kind of fees to contribute to the local government revenue. So that hopefully will also be a little bit lifted, so that the business environment can be created, which may affect the economy further. So this is one point.
Yes, just said, because very clearly it is in response to the pressures, economic pressures that China is facing. On all fronts. So I think Dr. Ghosal has very brilliantly contextualized, the motive behind President Xi Jinping to re-involve the private sector. Because over the last few years, starting with the crackdown on Alibaba, there was a crackdown on Didi. And on the other Chinese big tech companies, which I think the Chinese communist philosophy was that the private sector should never become too big for its boots and start challenging state power, because Alibaba had actually attacked the financial system, saying that it wasn't flexible enough to generate the kind of return. So now maybe there is perhaps an ideological adjustment. I wouldn't say change, because Xi Jinping is completely wedded to the supremacy and ascendancy of the Chinese Communist Party. So that is one thing. But and that would be really a way out for the Chinese economy. A readjustment of relationship with the Chinese state, and a greater space for the private sector, which is more efficient. And unlike the Indian private sector, the Chinese private sector, since very early on, has been contributing the bulk of the R&D expenditure in the economy. In India, maybe 38%, in China, up to 72% in 2010 when I analyzed it. They have been, so they are the drivers really of Chinese growth, because we've seen how technology drives Chinese growth, and it is up to trained economists to tell whether this technology push can make up for all the other problems that the Chinese economy is facing. But China will perhaps be able to better weather all the problems because of its autocratic government, authoritarian government. So it will be in a better position to control unrest over these issues. I was just intrigued very much. You mentioned President Trump and his attitude. He came out swinging against China, but under the influence, I believe, of Elon Musk, who has a YouTube channel, you must see it. Every day he comes out with praise of China.
And, his mother,
Yes.
was a great fan of Shanghai.
Okay.
She visits Shanghai quite regularly.
Yes.
Elon Musk's mother. Yeah. Sorry.
And not at all. So, whether he has had any influence in persuading him that, for example, the American defense companies, their supply chains are completely integrally dependent on China. It's come out in various American reports, government reports. So maybe this realization of the interdependence has toned down his attitude, because how much tariff he said that Mexicans and Canadians? 25%. China, he said 10%. I'm not sure if he's already levied them. Antara would know better. But he seems to have toned down the rhetoric a bit. He's talking about a China, Russia, US dialogue on solving problems in Ukraine, etc. So, the situation is in a bit of flux. It was Trump, having said that, it was President Trump who initiated this round of sanctions, trade war, etc. against China. So I wouldn't place any bets on his attitude softening, especially if he feels he can get leverage. But even the American economy has issues and problems. So, a more cooperative approach amongst all governments would benefit the world economy. So let's see.
You mentioned about the meeting between President Xi and the Chinese company heads. So you also need to see it from the perspective of what is being debated in China. So the biggest debate now is about who bears the cost of Trump tariff. the US consumers or Chinese enterprises. So the Chinese side obviously hopes that Chinese merchants pass on the burden on American consumers, triggering inflation in America, and then forcing, I mean, of course, if there is high inflation in America, it will cause public unrest, public grievance, it will force President Trump to retreat on the tariff issue. But as I also mentioned, that they are also aware what is happening in China is about price wars, about they are calling it involutionary competition. Involutionary competition is its biggest manifestation is crazy price wars based on reduction through salary cuts, layoffs, and R&D cuts in various companies. So domestically, it is leading to a sharp drop in commodity prices. It is driving down the corporate profits. All these companies who are Chinese companies who are expanding in other countries, going global, most of them are not profitable. So there is the corporate profit has shrunk over the years. The price war that I was talking about, domestically, it is wreaking havoc in terms of, bringing down commodity prices, driving down corporate profits, and also, causing decline in Chinese people's wages and employment and consumption power. And externally, in overseas market, as I told you, most of the companies are not profitable, be it the automobile sector or the solar panel sector. Most of them are facing widening losses as prices are plummeting in a fierce race to the bottom. On the other hand, China's export boom, based on price advantage, is triggering trade dispute in various countries from, say, for example, in EU, in Brazil, in South Africa. All these countries have very close ties with China, but because they are dumping products in all these countries, it's worsening China's relation with other countries. So these are the issues that have cropped up, and I can see Chinese scholars writing, and they are requesting these companies not to bring down prices any further and push the burden to the US consumers and not on the Chinese companies. So because that is a big threat to the this falling prices has become a big threat to the Chinese economy. So that is one thing I thought I'll just highlight.
No, just one point. I think China is also putting tariff on American like energy, oil, and those sectors. And but food market, I think they are making it less tariff so that they can combine the goals of common prosperity and fighting a competition against the American goods, so that it doesn't affect the common masses as such. So that is a one important thing which I thought also legitimizing the CPC further.
So yeah, I think that puts the perspective quite clearly, because he would, particularly when China is looking outward now towards a Trump presidency, it would rather close ranks within. So I think you put that into good perspective, Antara. Now we'll open it on to the audience. So if
Good evening, madam. My question is related to, in fact, we had a opportunity to hear different views, especially regarding the Trump 2.2 and how Chinese, in fact, is facing the challenges, Chinese economy is facing challenges. But we take a step back and look at that Trump first term, where, in fact, they tried the same thing, he tried the same thing, and he was not successful. And that time, the biggest, in fact, supporters of Chinese firms were the corporates. But as you mentioned in one of the your remarks, that the Chinese industry has got the biggest votaries in terms of American corporates, because their supply chains is so entwined with, in fact, the Chinese economy. It is very difficult. And second thing, that that time Mr. Trump tried to, in fact, bring these to get Mexico involved in offshoring some of the, in fact, supply chains to in fact, level it out with Chinese. That has not succeeded in the past. What is your opinion? Is it going to succeed this time also? Or it's just a kind of rhetoric, election rhetoric? After 3-4 months, most of the politicians, they say in this way, and when they realize, their policy advisors, their strategic people, when they advise that no, you have to, in fact, speed should be less, you should slow down, that's going to be even out in the future in next 5-6 months.
Yeah, let's take 2 more questions. Yeah, Siddharth.
My name is Siddharth. I work on Russia. So I just wanted to know that what happens to the Russia-China economic relations that have been booming since 2014. I mean, with this, we see the potential ceasefire discussions happening. So does this have any correlation with the economic cooperation that Russia has with China? I mean, more importantly, do you see any impact tariffs having a role in the Russia-China economic cooperation?
My name is Shreya. I'm a research intern at ORF. My area of interest is China studies. So I wanted to ask the ambassador a question. China has now shifted from being an economy of imitation to innovation driven. And you rightly pointed out that they're also focusing on design led innovation and tactics. So, despite having all of the constraints from the external world, from the US and European countries in terms of technology innovation, how is China going to bring out original innovation or design that is their own in the midst of all of the chaos and constraints from other countries?
As I said, Antara is very well summarized, the economic pressures within the Chinese economy and external challenges it faces. And in that background, will Trump succeed or not? This is a very tricky question. I think it's all on our minds. And Trump being chameleon-like, he will adjust and he will see where the trend is going. So I'm not sure if I can answer, but if you don't mind, I'll think about it a little and ask my co-panelists to look at that. On Russia-China economic cooperation, it's very interesting. If there is actually an agreement on the Ukrainian front, then one of Russia's conditions is sanctions should be dropped. And one of the reasons for China to distance itself from Russia a little bit is because of the sanctions. So once those are dropped, the economic cooperation will increase. But China is also a little wary of being completely dependent on Russia, for example, for energy supplies. So China will also calibrate its relationship with Russia. But with the prospect of peace, definitely relations will improve, increase, and strengthen. How is China innovating? China, I just mentioned all the strategies that it has adopted, and it has been talking about innovation, and not just imitation for a very long time, and that is what it has been working towards. Having said that, let's bear in mind that the truly disruptive technological breakthroughs were by the Americans in the 20th century, whether it was semiconductors, internet, even the aircraft. All those things were really American inventions, and everyone else has innovated on that. But having said that, sixth generation aircraft, fusion energy, 1000 seconds they've achieved, all that is Chinese. So this is a state-driven approach, state-sponsored with a whole lot of strategies, and the private sector is also investing a lot. The state enterprises are investing, and I can go into it in detail later also.
About this Trump, I just want to say that I think in the initial regime, Chinese are very much, forthcoming in having a dialogue with him. So you have an initial visit by Xi Jinping to America, and there he wanted to have some kind of a connection with Xi Jinping, with Trump, thinking that that might be favorable for China. But this time looks like that they are not doing any, they are taking their time. They are not doing, in fact, for that, when the president-elect, that ceremony was taking place, even Xi Jinping did not go. He sent, the other important delegates to America. So which means that China looks like very patiently, waiting for the right time to go to America if they want to. Second thing is that they are well prepared for as Antara has said very clearly, well prepared for the Trump administration and the possible consequences is going to have on China. So they are taking their time. They're not making any very strong statement so far against American, policies. Though there is a, this tit for tat, as she said, the tariff, and then they are putting tariff, but they're not passing any statement like you see in the Canada and in Mexico sense. So I think they are waiting, and they know exactly what they are getting into. So that is what my feeling is.
Can you just?
Yes, it's correct.
Ma'am, you have very rightly in fact said, because Madam Ambassador will in fact concur with me, that way Chinese diplomats, they do the negotiations, and the patience they have is marvelous. and probably they have worked out their strategies well to handle Trump 2.0. It is only the analyst base of India who are in fact going 360-degree different directions. That's what. Thank you.
Add something to what Sir said about China-US tariff war and who is going to win it, if that was your question. I mean, you said if Trump is going to be successful this time, which implicitly means that who is going to win it. So I'll just quote one of the Chinese analysts, Song Shui-tao, Tiefang Securities, from Tiefang Securities, and how he looks at it is how I would actually like to agree to how he looks at it. And he says that the limit of trade war between China, US, the limit of the trade war between China and US is actually a question of the limit of US consumers' tolerance of inflation on one hand, and the profit margin of Chinese exporting companies on the other hand. So whichever side cannot hold up is going to blink first.
Price, prepare for it. So he's making the American citizens prepared for the worst to come.
Absolutely.
Strategy, and this has been right from the beginning, is to retain technological supremacy and overall geopolitical supremacy over the Chinese. So whatever little flexibility they may show or accommodation will always be subservient to that main aim. So I think they will take advantage of all the weaknesses that the Chinese economy is displaying.
State is that they don't want competition in terms of China as their major competitor. That's the only whole policy boils down to that.
And therefore, there's so much focus on domestic growth generation, because they are thinking the crisis may come in terms of US-China tariff war. So let's focus on, and that's where the problem is coming. That's the opportunity.
So, Ambassador ma'am, like you said, the American defense industry is majorly intertwined with the Chinese supply chain, as in their supply chain is backward integrated completely, or maybe to a larger extent. So it may not have happened overnight. I mean, my name is Trinetra Agarwal. I've spent a fair number of years in the offshoring industry. It doesn't happen overnight. And it is very deliberate, be it the corporate or the state spending. It is very deliberate. They allow it to happen for various reasons. Now, my assumption, if you look at it, Trump was not responsible for it. Perhaps the earlier administrations, it's been carried forward. So what do you see? I mean, if they want to de-risk it or diversify it, who fits in the picture? India, Latin America? I mean, what's your take? How do you see that happening?
Fill that gap in a hurry. So we've been advocating that we should increase our R&D investment, and we have the capability. I mean, our design engineers are all over the United States. I was looking at a CSET publication which talks about, it gives a chart, nearly 25% to 30 to 50% of engineers in NVIDIA, in LAM, in applied materials, design, semiconductor design, the most complicated thing in the world, are Indian or Indian origin. So, this is a proposal we gave to government. So please create the conditions in India for these people to stay here. Even if you have to give astronomical salaries, just do it. I mean, it's your talent which is going there and creating trillion-dollar valuations. I mean, you look at the valuations of Apple and Amazon, etc. Amazon Web Services, $1 trillion, everything. NVIDIA, how many? $3 trillion before the recent correction because of DeepSeek. So let's see that, till that happens, I don't see that dependence decreasing. But again, Vietnam, Mexico, Malaysia, all these countries are moving very fast in this direction. So we need to move faster. Thank you.
I just wanted to take that thought a little further. Now, see, we've been hearing about this entire China plus one. Now, you spoke about Vietnam, Malaysia. Where do you see, what is it that India requires or India needs to do in the next 3 to 4 years that will, set our house in order to become a viable destination? Or why is it that we are not being seen as a viable destination? So if you could kind of expound on that, Professor Agarwal, if you could also.
I think I remember there was a lot of interest in investing in India by Chinese companies way back in 2015, when our Prime Minister that time, Narendra Modi, was invited, and then there was a series of bilateral negotiation. I remember even we were asked to prepare a report that where the FDI can come and where the Chinese companies can come. So there was a lot of interest of Chinese businessmen in India, but the major problem which they thought is a atmosphere, the easing the making the investment atmosphere a little more feasible, easing out the bureaucratic problems as well as the bureaucratic the hassles, as well as the labor laws. So which were the 3 4 important bottlenecks they thought you face when you're investing in India. So that was a kind of concerns they remember. I remember there were series of discussion took place in China that time, because they're very much interested to invest in India. So
get to do that. The ease of doing business is, we're talking about it. I think ORF brought out a study, thousands of, rules and regulations which are still existing, and hampering the, dynamic development of Indian business. Having said that, if you don't mind, we have given several suggestions to government, on how to, because our whole thing is that if we improve the R&D intensity of our economy, then obviously things will gravitate towards us, because just in the process of improving that, you improve your ease of doing business, you improve the technological capability of Indian companies, then you can fit into all these supply chains. And we've given several suggestions on this. So if we have time, I can go into this.
Yeah, sure, please. I think you can.
Okay. So the first thing is we had started with the defense sector, in which we had pointed an obvious anomaly. And that was that, most defense equipment producing nations have something called the RDA. I had attended a fantastic seminar in San Jose. Tai Ming Chung, he had organized it. And all the defense producing countries have something called the defense production procedure. They call it a different name, but it starts with R&D. It starts and then goes on to production and then to acquisition. We start with acquisitions. The defense acquisitions procedure. It's a completely import mindset right from the beginning. And that's why even today, and we've given a plan to government, and National Security Council Secretariat has greeted it positively, but they're not yet they've not yet implemented it. We just gave it a couple of months ago. And that is that we should proceed with indigenization at a component level. Not platforms. What's happening is that we say, let's indigenize the weapons platform, this jet, etc. But it's composed of thousands of components. So what happens is, even if you give it to a DPSU, the DPSU, which has no R&D culture, and a former defense secretary said this to me, and we organized a seminar on this also, they have no R&D culture. So what they do is they subcontract mostly to foreigners. That's why our import bill remains the highest in the world. Defense imports bill remains the highest in the world even now. We talk about indigenization of so many contracts given, and we monitor all this, and yet our imports bill remains right at that level. So this was one thing that we should definitely completely overhaul, and the new defense secretary has said that he wants to overhaul, but he has given no clear plan on it. So I think we should write a letter to him on this, because this was an old proposal that we gave and it may have vanished in the files. So RDA was one, and we have asked for, in procurement, for example, in the tenders, and this has been accepted, by the way. It has come in the amendments in the Make in India procedures, that the certifications demanded, Magic Gartner, and about 13 specifications for which you pay $1 million each, that are demanded of Indian companies, should be abolished, as long as they meet the technological and quality maturity level standards. So that should be abolished. The specifications sometimes were written, for example, the BSNL tender, the specifications were written for the Chinese companies. We mounted a campaign since 2018, and success has a lot of mothers, but we were the ones who convinced the government there were security issues in having foreign companies own our networks. That tender was withdrawn, and the tender was given to an Indian consortium. Sankhya and Tejas Networks were part of that consortium, and while we were together with them, they were investing heavily in R&D. I hope that continues, because our experience with the big conglomerates, apart from Bharat Forge, is that they do not invest in R&D. There's one big conglomerate, we'd asked them, please give us your R&D figures. They sent me a very pretty presentation on everything under the sun, but not their R&D figures. I don't know what business is doing really. And this is procurement, R&D intensity, incentives, tax deductions. China gives 220% tax relief to companies investing in tangible R&D assets and so on. So, this is what we've been suggesting to government, and I don't remember all of them. I've got my notes here. So, I mean, in general,
Kalpit, you asked about why China plus one didn't work for India, and Professor Agarwal also, Ambassador ma'am, mentioned about the challenges India faces in terms of ease of doing business. But I think part of it is also because um, China didn't want many of its industries to shift to India. Rather than it preferred destinations like Vietnam and Mexico. And the reason behind it is, because they think the development of Vietnam and Mexico's manufacturing industry is currently dominated by relatively single and low-end light industries and processing and assembling industry. They are very dependent on China for mainstream products, and they cannot develop a full industrial chain system which can compete with China. So that is one of the reasons why they prefer these destinations over India. Whereas they think, compared to Vietnam or Mexico, India is relatively, their dependence on China, India's dependence on China is relatively low, and any significant transfer of industry from China can make India a very strong competitor to China's position in the global supply chain. And that is one of the reasons why they are they are somewhat reticent about, Chinese industries shifting to India. So I thought I'll just highlight that.
To supplement that answer, one of the things we noticed with the national security state of China and the US also has a national security state, by the way, with the state taking a very strong role in promoting technological development through procurement, funding, venture capital funds, etc. Palantir, which is now working in Ukraine and is now at a $260 billion valuation, was incubated by InQtel, which is a CIA venture capital fund. So what they did was transfer the risk to the public sector, to government, by funding, upfront R&D of products which didn't have a tangible commercial outcome. So that's something which is totally absent in the Indian ecosystem, with a no cost, no commitment kind of approach that we have. Then industrial policy, I've already mentioned, was totally tailored, to, that's what we need to do. In ITA 1, as I said, we completely opened up WTO, we surrendered our whole thing. The other thing which I forgot to mention is skills. Critical. When I was in Switzerland, I found that all the CEOs of multi-million-dollar companies were from the skills education stream, because they understood, they had excellent skills education programs, and they learned how to build things bottom up. We have suggested an Atmanirbhar law to government, because the American legislation, somebody should do it, or if we could love to do a study with your corporation. US legislation spans at least 100 legislations on Atmanirbharta, the American Buy America, Build America, Buy America. And this goes with our approach on bills of materials, because the Americans follow the bills of materials approach. We got the idea from examining their thing. Shreya, you said how the Chinese have done on technology. So I talked about the government initiatives, but I just wanted to highlight what Huawei did. Huawei pivoted from being a major telecom company because it was removed from European networks. America, of course, banned it. We got it removed. Totally independently of these, by the way. Our security concerns, which SITARA promoted, were totally independent of what was going on abroad. I wasn't even aware of what was going on abroad at that time. And what Huawei did was an enormous and excellent adaptation to the new adverse conditions that they were facing. The bans, the bans mainly. And what they did, for example, they became the leader, and the government took them on as a partner of the drive to create semiconductor independence. So they've created the Hubble Investment Company, technology investment company, and through that they have created a sort of consortium of big and small companies, and they're all working in tandem. Alibaba, Tencent, all of these are coming out with their own AI models. The Alibaba model has even been considered better than OpenAI's model. So in lithography, Huawei's lithography, they have started, this work on EUVs, on electronic design automation. They are working with another company on this. They have their own smartphone operating system, and so on. And the other interesting and clever thing they've done is move to open source, to RISC-V. And what they did was they had the international RISC-V foundation transferred to Switzerland, where the Americans could not touch them. So through that, they will find avenues to cooperate with other technology providers. So yeah, got my notes in time.
So, are there any questions? Any more questions? Yeah. Yes, please.
My greetings to the panel. Actually, I'm a student of international law and diplomacy at the Indian Society of International Law. And I was just thinking that India is getting a lot of opportunity when China is getting pressure from many of the sides, as Ma'am Antara has said. And what USA is doing with respect to the China is going to be a big lesson for India too, how they are dealing with them. Because the same situation is going with the India, as we are stuck in the dealing of the defense procurement in current scenario. We are in the pressure to purchase the defense equipments. And with respect to the Russia, we are in the, experts are saying that if we are going with the Russia, we are going to be okay. But some experts are saying that in the few months, the deal will be done and India is going with the both of the fighter jets. So I'll say that India is going to purchase and invest heavily on the, it was not a plan. Actually, India was planning for the Russia, as experts, as I was studying. So I am just saying that India is going to be, India is going to learn a lesson to how to deal with USA in future, as this USA and China is going to be in the few months. In few months, the India will get the chance how to deal with the Trump, because Trump is now in another mood to deal with the nations who are in the pressure. And definitely the new diplomatic windows which are going to be open, India is going to deal with them, and India will get the benefit for their economy. Yes. I am just saying we are going to learn it, and definitely how if you can focus, then how we are going to deal with the Trump. Yeah, cope up with that.
Difference between China and India. India is a deficit economy and China is a surplus economy. And even, I mean, like, our relation with US is very different from China. Is a major, trade partner to the United States. We are not. So our position is very different from China, and our equation is going to be very different from China's equation with the United States.
I'll give you one example. This Walmart has got a big consumer market in China. So China has become such an indispensable market for American goods that you cannot survive in. Even now, I remember Apple iPhone, who are the big consumers, not Indians, Chinese. So their equations are very different, as she's saying correctly, surplus economy than India. So those kind of tariff and etc. may not come to us, because that will happen to the economy which are dependent on each other.
Is our exports to US, especially in the food processing sector and food sector. That is where, in fact, they will come out with, in fact, various kind of, in fact, restrictions, both tariff restrictions, non-tariff restrictions also.
At the core of China's tariff policy, so it is, at the core of Trump's tariff policy. And, we are not at the same league with China. I mean, that equation that they have, China-US, is very different from the equation that India-US has. So we are really not at the core of President Trump's tariff policy. So one day when we are in China's position, we might
have another panel discussion on that. Yeah. Anyways, I think let's draw this to an end. I'd like to thank all the panelists for sharing their insights, and this is also a continuing saga. So it's Trump has just about taken over And I'm sure there will be many more milestones and many more things to discuss on the way, in fact, in the years to come. So thank you again. Thank you so much for your time and patience and, taking all the queries and from the audience. So, and we ask everyone to join us in the next room for some refreshments. Thank you. Thanks.